everyone, good afternoon. It's Monday. I'm going to update. Today is the 5th election day in the United States. That's why I am recording this video here as well, with the aim of sharing the possible movements we might see in the course of voting. And today, even the reading, as we know it, is evolving. In the last few days, and also in the coming days after the election, we will experience some atypical volatility, so we should trade with more caution, right? And focus on the levels. They are indeed important levels, important liquidity captures as well. So, here we go. A Bitcoin chart opened here, a daily chart. What do we have here? We managed to get it yesterday. In this specific scenario or environment, what exactly is it that we are able to perceive or observe with our senses, taking into account all the various elements and factors that might be present and influencing our perception at this particular moment in time? The price may rise from the region it is currently in because we have a bullish impulse where we had liquidity capture and a structural break. However, this upward movement captured liquidity in this double body, and although the price did not sweep down to the H, it did sweep the high, and the price swept and initiated the correction movement. This correction movement has one aspect that is not generating much liquidity. It is a movement that is practically very straight. If the movement is interesting for continuation from this healthier level, it would be the movement from the current level. I would like to see it even generated a bit of liquidity, but it was at the time, we have 4 hours, it generated a bit of liquidity. A little liquidity, that's why I took this account unpublished, but it was before I continued to discontinue me. But with this, right? But with this, at the time of the election, this current narrative, what could the market do? What could Bitcoin do? Bitcoin could look for manipulation, capturing below the lows, manipulating the stop loss of everyone who is below those lows here. There are many people who believe that there is not a great possibility of winning. The Bitcoin market is set to rise steeply and directly, but in reality, institutional players may first liquidate retail positions before making this move, so I would look for a healthier buying position. Starting from the level of 64 and 64,000, which would be reaching here at the top of our oil zone, which would be approximately 62,000. If I had a better risk, a position that would be better structured, it would be in the range of 63,000, 300,000. Between 63,300 and 62, if there wasn't an interesting air block, you can work with respect to the new one you prefer, but we are below the other block, giving a very small margin due to the movement of external liquidity, which is below 58,900. But there are two investments. You have to put the video there. Look at this region between 64 and 62. So between 64 and 62, the oil region is quite interesting because in the history of the world, what did the market do like this? Let's look at this structure here so you can understand what the market did. What was it that happened? The Bitcoin captured the liquidity of this bottom and broke this top. This was a valid top because it had already captured liquidity previously. In other words, the Bitcoin captured the liquidity of this top and the liquidity of the bottom and reversed, which is a true structure. What did we have? We had the formation of these two funds. These two funds, in fact, are induction funds. They are three of induction in total. Mainly this fund does not want to buy any other liquidity. It does not want liquidity in its formation. So it is a weak fund. It is a fund where retail usually trades, meaning there is a stop loss down here. What could we expect? We could expect this movement to happen. The price captures the liquidity below these lows, manipulating retail, aligning the flow here, with movement and segment in the upward structure for the liquidity of TH. That's what I expect. It's what could happen. If it rises from here, that would also be something natural. I wouldn't be surprised because this fund here is also a valid fund as it captured liquidity previously. I wouldn't be surprised, but it's quite likely that the price will manipulate lower because it needs more liquidity to drive that rise. This is the view for Bitcoin in the LTF of Bitcoin. There shouldn't be any, oh, what I was expecting. The community hears the following. If I wanted, and in the video that was no. I wanted to take a short opportunity in Bitcoin, an opportunity where I don't need this top that didn't capture liquidity previously. This opportunity is unique because it allows me to engage with Bitcoin in a way that is both strategic and insightful. I shared the clip yesterday, but it didn't activate. Maybe it will still activate. Maybe there will be movement. This potential movement could be significant, offering new insights and opportunities. If it weren't for Bitcoin's governance, Bitcoin made this change until then. It's a correction on the HDF chart, on our larger chart, daily, weekly. This correction is crucial as it provides a clearer picture of the market trends and dynamics. So what happens next in this ever-evolving landscape of Bitcoin trading and governance? In the midst of this movement, the market generated an inefficiency, a BPE, which is an inefficiency on both sides, both buying and selling, with a valid market structure. The price captured liquidity, broke structure, and began to generate induction liquidity. What is induced liquidity? Generally, when the price makes a break, a structure break, and this structure break is a valid break, it is truly a structure break and not liquidity capture. There is a difference between structure break and liquidity capture. When the price makes a valid structure break, it is indeed a structure break. That is, as I am, it has character, or is following the flow. What do we expect the price to do? The price starts to generate liquidity. This liquidity can take the form of a graphical figure, which is the famous price echo technical analysis. That is, it can be a type of top, or it can just be an accumulation. Generally, the price starts to form these figures, and then what does the price do? It misleads retail investors. It misled retail investors. The price goes up, captures all the liquidity, and continues the movement. I expected Bitcoin to make this movement here. It's misleading retail leave. The price comes, captures liquidity above these points, people start selling prematurely, and they are above 50%. These are weak tops. They are weak tops. There are price tops. It goes there, captures this liquidity, and continues the movement towards the 64% region. It's a possibility that I was seeing in the price, which can still happen. The implementation can still happen, and they will stay alert. It is another setup for Bitcoin. I will talk after. Let's quickly talk about Ethereum because the video is getting quite long. But Ethereum is as follows. Ethereum has a liquidity fund, and this fund here is not a valid fund. It is a fund that has not completely broken. That is to say, this fund did not initiate a new structure. It is liquidity. This here is liquidity, meaning I expect the market to capture this liquidity, and depending on the region it comes to support, it captures this liquidity and aligns with it. After the alignment of upward flow, I will look for healthy capture of this liquidity. There is plenty of liquidity for the screen to capture within this region. There is an interesting demand zone at 2200 down to 2250. Okay? With the external liquidity here in the region of our swing low, right? Around the 2100 region, more or less. So the workshop also has liquidity to capture there at the bottom. Let's wait for this capture, okay? Guys, just because there is indeed liquidity to capture down there doesn't mean you should come in like this. Reading here. We have a well-defined region and context. If you sell an actor in the intermarket, it makes no sense if you enter atypical communities that are not really communities, just people talking for marketing purposes. You will take positions like that, but these positions do not have a good inspector and lack trading context. So, you need to be a bit smarter. To survive in the market, especially in a balanced market, you have to be smart. So it is not smart to sell in the demand zone or to buy in the supply zone. This is where the retail is. We, who trade with an institutional perspective, take the liquidity from this retail for that reason, along with the institutions. That's why I say we follow the traces of marketing. We are not the marketing, far from it, but we try to follow their traces. And that's it. Happy Monday to everyone. Let's stay alert, okay? Election tomorrow, a lot of volatility ahead, and that's it, folks.